Hi, this is Randy Finney with Right Side of the Chart, and this is a mid-session update for Thursday, December 19th, 2019. I wanted to go over the charts of the indexes and several commodities, other things such as Treasury bonds. So pretty much go over the broad asset classes, Treasury bonds, gold, precious metals, things like that. I'm not going to go over any individual stocks other than this one. I'm only picking Tesla, not that it's anything of a standout, screaming trade idea, but I did make a post. I believe I covered it in a video recently, and I know I updated. Yes, I followed up in the trading room. Somebody asked about Tesla. They missed it in the video originally, and I said, look, here's what will probably happen. It's going to come up here. This is a very, very well-defined resistance level, and I said it'll probably either reverse just shy or just above that, maybe go up to about the 405 area, I had said in that response. And today so far, it went as high as, there it is, 406.85. And reason being, you have a well-watched level like this, stock's going to usually do one of two things. Now, it's reversed off there quite a bit, but just like you can see last time, it reversed a little shy, and this time it went above it. From my experience, when you have a very well-defined level, after a while it'll start to do that. This reversal just shy kind of burns the longs that were holding out for a move up to 388, and it also, or any shorts that wanted to short at 388. And then what this will do, it's almost the reverse. It'll blow out shorts that stepped in to try to short 388, squeeze them out on a breakout above, suck in some longs that are taking this breakout, because technically it is a breakout, but I would put pretty good odds that it'll fail. So I'm passing this along. I'm not going to make an official trade, at least not at this point in time, because the market has just an extremely resilient bid. That's not going to last forever, but it's what's going on right now, and until it does, you have to respect it for what it is. So as I go through the video, I'll jump back to those 60-minute charts I posted this morning on IWM and the small cap futures, as well as QQQ and SPY. And when those break down, the market will go down, most likely have a pullback around 3% or so, I think is what I was looking for in the small caps, about 3.25. Maybe I'll have to measure it out for the large caps, and I think Tesla will come back in. So what I think Tesla is, it is this is what I would call a gut shot trade, kind of speculative, aggressive bet. It's certainly in an uptrend, and on top of that, it's broken out today. But sometimes I'll short breakouts that I suspect will fail. Why do I think it'll fail? Well, number one, at the very least, I expect a pullback to come back in. Rarely, very rarely, do you see a stock spend this much fuel just to get to the breakout point and then just keep going like it's not even there. I would put very, very good odds that at best Tesla will have to come in and do this, test that level a little bit, even if it's going to break out and move on. So what I'm looking for is a pullback here to around that 361 area, and that would be from where we're at right about now. That's a drop of about 10% or so. So it's all about risk reward. So the way to put it here is the probability of success on a short trade. It's about as counter trend as a counter trend trade can get. That's a little bit of a tongue twister for me. Bullish price action, breakout today. So, if it's not your cup of tea, pass on it. But I think, short here with a stop, let's say a 3-4% stop loss from where we're at right now, no more than that, for a minimum pullback of about 10% from where we're at. And you could, of course, if it starts to reverse, you could then, when you get to your entry price, when the trade starts to get a little bit profitable, lower your stop to entry, and watch for a break of this trend line, because this is a very steep rising wedge. This line here and this one here. Here, let me draw it out for you. And so, again, just one trade idea I wanted to pass along on an individual stock, only because it stands out today. Again, it had a little bit of a consolidation there to somewhat help alleviate the overbought conditions, but this is the run it's made. This, with virtually no stop, little bit of a consolidation and a leg up. You can see in extreme overbought conditions down here. The fact the last time the stock reached such extreme overbought readings was back here in 2017, and that was followed by a double-digit drop right there. And so you have everything I like to see. You have potential negative divergence, potential because it needs to be confirmed with a bearish crossover on the PPO. So I'd need to see the PPO turn down soon, and it all kind of meshes. If we do reverse, it probably, PPO, depends how far we go, should turn down. And at that point, keep in mind, if that all happens, we get that reversal, a few things will happen. Number one, we'll have the first divergent high right here on the daily chart in all year, actually, since 2019. Yeah, last fall. Last time we had a divergent high. Not that I'm looking for the same move right now, but that Tesla dropped 53% from that divergent high. You can see my chart. I won't go over them all. You can see divergent high. You can see all the corrections. 1, 2, 3, 4, 5 divergent highs in the past several years, all off the same level, all around the same level. All of them were double digits, if not well into the double digits. You know, as I said, as much as 50%. These are probably 30% or so drops. And that's that. Weekly chart. You know, Tesla's traded in these two blocks, if you will, in in recent years, all the way back from 2014 right here. Traded in this range, and then it traded in this range from 2017 through mid 2019. Dropped back to the lower range, traded there for a while, and we're right back to the top of that range. And look, maybe the stock breaks out eventually, but again, it's just been my experience that stocks that have spent a lot of energy just to get to the breakout point have limited upside from there. So at best, most bullish scenario, pull back, kind of consolidate, work off the overbought conditions, and then maybe Tesla wants to break out. Could be wrong. Sometimes stocks will defy overbought conditions, but that's that. Let's move on. So, and again, bigger picture would say, look, minimum target, I think it could react on this trend line. That is certainly a possibility. One more reaction wouldn't hurt. But I'd say even if it does, you probably get a momentum-fueled overshoot. I think the false breakout be pretty quick. I think you'll see a lot of profit taken. Probably be a 2, 3, maybe 4-day pullback trade, hit that 361 target would be my guess if it does. And then even if it overshoots it, you could come back within the wedge and then continue to wedge higher and break out later. So I'll keep it updated. I'll keep an update on this if that starts to play out. If the stock just continues higher, like I said, much more than 3-4% higher, then you'd probably be stopped out on this trade, but then you can still keep it on your radar for another one. All right, let's look at the indexes. I'm not going to go over the ETFs and the ETNs that track these indexes, only because I want to keep this get this video out where it's not so long. If I go over every chart, both futures and then the ETN or ETF that tracks it, it almost doubles the time in the video. With that being said, I understand a lot of you don't trade futures. I like to use these futures charts. Whether I'm trading the futures or the ETFs, I like to use the futures charts because it tells the complete picture. When we look at NQ or you look at gold, you're looking at trades that go virtually almost around the clock, 24/7, virtually around the clock. Most futures will shut down, U.S. futures on Friday night and then opening on Sunday night. Other than that, they're trading around the clock. So the price action, these candlesticks, paint the entire picture. Whereas QQQ and SPY or GLD for gold, they're only telling me what's happened pretty much from 9:30 a.m. Eastern Time to 4 p.m. Eastern Time. And you have traders, gold or even the U.S. indexes, people trade them around the world. So I want to see the entire story, and it lets me pick up trend lines, support levels, resistance levels that I may not see on SPY or QQQ or GLD or any of those. All right, so again, I posted updates on the 60-minute charts with QQQ and SPY this morning, but here's what I'm watching. You essentially have these wedge-type patterns. Remember, this line here, this is a divergence line. There's not a lot of reactions. Divergences can continue to grow. Then we could morph into a price channel. Maybe the divergences are taken out, but as of now, that's the wedge-type pattern. You can see we're diverging here. Clean negative divergence, just like those index charts I showed you this morning. We had divergence right here, negative divergence. I don't know why this line is missing. Let's add it back here. From time to time, I have to update these charts. When the futures roll, this is from Interactive Brokers. What they do is, this is the continuous contract. The chart just blanks out. It's gone. So I have to, and that's not a bad idea. Then I have to replicate the chart again, new trend lines, but it lets me see it with fresh eyes. But keep in mind, when that happens, the levels will change. Because on stock futures, these are futures contracts. Sometimes, well, when you do roll, some of these support and resistance levels that line up with the reactions will be a little bit different. Just keep that in mind if you're, and as always, if you have a question about any of my charts, just drop it in the comment section below, and I'll try to answer those questions. That's it. So I color-coded these appropriately. I think the trend lines and the support level in yellow right now, what I call the salient levels, the ones to watch that have the biggest impact, and that would be this uptrend line and the 85.94 level right there, that has been acting as support recently. Both were tested today, the little spike down right there. I'm not sure if that's an erroneous print. You can see this little candlestick shadow or tail right there. But either way, there's plenty of reactions back here. So that's the level I'm watching. Make no mistake about it. I point out, if I do point out like I have here, potential bearish patterns, a bearish rising wedge, or a security moving up with negative divergence is a potential bearish pattern. It's a potential short trade, with emphasis on the word potential. Just like weeks back, I was harping on the 8200 level down here for NQ, and we never took it out. So you can see on the futures that moved up to 8218 when the futures rolled. That's where that 8200 line was on the December contracts. These are the March contracts, so the continuous. So that's it. Let's keep it simple. That would be, it's like any potential pattern. It's untriggered. We could continue to walk higher, but this is a pretty clean looking pattern. So watch for a break. You can see first target right here, 85.50 or 80, a little bit above 85.50. So you might want to cover a hair below, or I'm sorry, hair above that if you were to short it. And I think we probably come back in there about 84, 85 or so on NQ. And it all depends on if and when we get a sell signal. But from where we're at right now, that would represent a drop of about 2%. Not to say that we couldn't do more, but I think that would be at this point in time, unless I saw something big change in the markets, that's it. The trend has been strong. They're buying every dip. So, for a quick pullback trade, and this isn't anything I'd make as an official trade, 2% gain on the index is just not enough. Most of the trade ideas on the site, most of them are looking for at least, double-digit or high single-digit gains on most of the swing trades. And, that'd be, again, just a quick pullback trade for you active traders. All right, next one up, of course, we want to look at ES. I know a lot of people trade the S&P 500, E-minis. In addition, you want to see both break down. This is, if anything's the stock market, the stock market is simply, it's a combination of all the individual stocks out there, trading. So there's no one index that's really the stock market, but the closest thing to it, or most representative, either the S&P 500 or the Wilshire 5000. Probably Wilshire's a little more accurate because it includes different market cap sizes, but most people watch the S&P 500. So there it is. Comparable trend lines in yellow, and the levels right there, that is about 31.90, and then the uptrend line. So break of that would take us down here. First target about 31.61, and second target right now 31.34. If there's here's an additional target if things happen to get ugly, and that's about 30.80. But we'll see. Let's first things first, and we need to break this trend and get a sell signal. And then how does it look if we get it? Is it impulsive, big red candle, solid 60-minute close below, or do we just kind of limp through? And so far this was the biggest drop we've had in a while. So we'll watch it, monitor. Maybe we get something similar like this bearish pennant continuation pattern right here. If we get anything like that, then we'll extend targets if we get a downside break. All right, and you can see, like NQ, I didn't mention there, but the red line is an extreme overbought conditions, and often I highlighted those recently when they were hit. Sometimes I said they're one and done. You hit that level, like you did right here, and you're correct. And sometimes you hit that level, and what happens is the market continues, other than small pullbacks, it moves higher while you build divergences, just like it did here. And it's once you get the negative divergence that the big correction finally plays out. So again, one and done right there. We had the overbought reading here. So far, the market has consolidated in time, not in price. We say prices can correct in one of two ways. I guess just said time, meaning they move sideways, and while moving sideways, they work off the overbought conditions, trying to click an arrow. That's it. That's sideways consolidation in time. And you can see what happens is the momentum indicators, even though the market didn't drop at all, they dropped. Why? Because you had upside momentum. When the slope changes, you had a positive slope, upward momentum. When you start going sideways, that's a change of momentum. Obviously, they would drop harder if we corrected in price. So either way, we'll watch that. And like I said, that does sometimes it helps to alleviate those overbought conditions. But again, you have the divergences in place, so we'll watch for potential sell signals. Nothing crazy right now. Trend indicator, at least this PPO, when it's above that the zero line right there, the trend is bullish, and that's the case right now. Sometimes it'll whip around through there, but it does a pretty good job. That I'm talking about the white line, the second of the two to cross the signal line. All right, let's move on to, well, I might as well talk on RTY since I covered it this morning. I already posted a chart. Where is that one? Here it is. RTY, just a nice clean wedge. Like I said, this is one of my favorites if we get a sell signal. But as I said this morning, small caps are only going to go so far without the large caps following. So if you break down here, your odds are going to be infinitely better if QQQ, SPY, and QES also broke their respective wedges. And you can see we have some minor support right there that really needs to go as well. So here's one scenario. Maybe, RTY, the small cap futures, breaks down. Large caps hit their trendline supports and bounce, so maybe RTY then back test from below, and then at that point you break down on ES and NQ or QQQ and SPY, and then you head on down to this target zone right here, which is about runs from about one. I have it at 1639.50 up to 1642.50. We'll call it somewhere above there. So again, just a potential setup, but a nice clean bearish looking. A nice clean looking bearish rising wedge pattern. I'll try to talk fast to get these videos out, but as I say, you can always just speed up the duration. You go to YouTube, click on settings. Here's a little divergent high back here. Actually, that divergence line really should be right there, because that's it's where I had it. We had an equal high, and we put in a divergent high right here and then made an equal high right there, and that extended the divergence, and then boom, there was that drop with that. Remember those bear flags? That was a beautiful little bear flag right there. So that was the last correction we had, and just like now, negative divergence. Yeah, trend was up then as well, and this wasn't a huge trade, but if you trade futures, that put a few pennies in your pocket for sure. All right, let's look at a few other things and we'll wrap this up. And try to tie this in with related things. So Treasury bonds, although, almost in a sense opposite of what a stock is. Bonds are IOUs, they're debt, they're not equity, they're not stocks. It's a completely different asset class, but treasuries tend to move inversely correlated to stocks because, when the stock market is rallying, economic growth expectations are increasing, therefore, inflation rates and interest rate expectations, which causes bond prices to fall. And of course, you also have the flight to safety bid that goes on and off. Market rallies, people tend to sell their treasuries, and when the market corrects, especially institutions, smart money will move into treasuries. So what I see here, I see something finally for the first time in a while that helps to confirm those bearish rising wedges on the indexes, because you have the opposite on here on bonds right now, at least treasury bonds, which are all that really matter, more so than corporates. When you're talking about the stock market, it's a nice potential bullish falling wedge. There's your trend line. But you also have a pretty significant support, that 157.055 level I've been talking about for a while. It was support. We broke it. We're under it now. Remember, just like those bearish rising wedges on the index, this is only a potentially bullish pattern without any buy signals whatsoever. Make no mistake about it. Treasuries are still above the recent lows right there, the recent reaction lows. But what you'd want to see is not a breakout of just the trend line, but ideally above that 157.55 if it happened now, because they're so close. If I have two resistance levels in close proximity, I give the benefit of the doubt to the last of the two, because if some eyes are watching this trend line, they take the breakout, but then everyone else is looking at this 157.055 level, then that's where the sellers may step in. However, should we, should this trend continue, equity markets continue to rise for a few days, treasuries continue to move down, they could certainly room within this wedge to move down and then break out down here. And in which case you have a higher run up to that level there. And then, of course, if that breaks out, you can see I could add, and I will add for you in case you're a treasury trader, one more level here that's likely to come into play in the midpoint there, about 158.200 or so. And so that's something to watch. And if you see this breakout first, where you see the indexes, this will help confirm a short trade if you start to see, buy signal here in Treasury bonds. We had a falling wedge there, and that one didn't go too far. We broke out, but what happened is we extended the divergences. Sometimes I don't update all these charts, and sometimes futures will roll, and I don't add all the lines, but you can see what happened there is the same divergence extended. We had a breakout, came in, put in a lower low, kept the divergences intact. They just became larger, and then boom, nice tradable rally in treasuries there. So that's the point I'm trying to make here. Maybe these divergences extend out here in a few weeks, few days. Maybe not. They don't have to, but they could. And here's a 10-year. We were just looking, a lot of these charts are 60-minute charts. I'll try to specify otherwise, and if I don't make mention, you just want to glance up here in the upper left-hand corner. You can see the security right there that I'm talking about and the time frame. So right here it's daily candlesticks, and we're looking at 18 months of price history there. So this is ZN. These are the 10-year Treasury bonds, and what stands out to me, we did break, the trend is bearish and has been since this point right here. We had a very strong run this year in Treasury bonds, which ended back in August right here, and it ended, was clearly telegraphed with a divergent high, negative divergence. We came down, hit the trend line, bounced off the trend line, and then finally broke down, back tested. So we're below the primary trend line, which puts, Treasuries in a, longer term bearish posture, but we have fallen to a pretty decent support here, about 127, 290 or so on the 10-year. Again, these are 10-year Treasury bond futures, similar to the 30-year, but just want to show you this chart. There's a downturn line to watch there. So this line here in the support line below forms a descending triangle pattern, and those could break. They're inherently bearish patterns, but they can break and often do to the upside, and that would be bullish. So this is what you'll want to watch, and there's some resistance there that may come into play. If it does break down, keep in mind there's a potential for a nice fake out move, because doing so would give us positive divergence. So let me show you. Oops, where'd that go? Let me show you what that scenario would look like. I had it partially drawn out, and then I erased the chart. So right here, should we break down and then reverse, it would look something like this. We draw a divergence line right here. We'd have this little, downtrend line to watch, and assuming it happened relatively soon, we'd have the bullish divergence in place right here, and that could set the stage for a decent rally. So that's Treasury bonds, and let's move on to the next one. Okay, on a related note, again, gold, because that's a risk-off asset. I'm sorry, risk-on. No, gosh, I keep saying that wrong. Equities are risk on, meaning they're rallying when people are embracing risk and they're not really afraid of what's going on in the stock market. Treasuries and gold are what they refer to as risk off assets. They tend to have inflows when people are worried about the stock market or the economy or other things there. So it's been a well-defined level. I've posted this chart several times. You can find that by going to the resource page down below, use the search functions, or in the trading room all the way to the right of the page, there's a little search icon. Type in /GC for GC futures. That's gold futures. Or you can type in GLD, and you can see the front page post on that. But either way, that's it. As I pointed out, there's really these three levels I'm watching. Down below, support around about 1458. Up above, resistance about 1488, and then there's this uptrend line as well. So if we were to reverse once again at this 1488, I mean, it's pretty simple. What I see is a clear trading range right here. We broke below that trading range. We started a new trading range, which we're in now. The MO has been to be long up to this point, then reverse and go short, or close your longs and go down. Now, like any trading range, it's going to break one way or the other sooner than later. Sometimes you get little, false breaks like you had right here. But, if you get back in the range, just respect it. Whipsaws are an unavoidable part of trading. But if you do break out, you have to respect it. A breakout above could very well take us back to the top of the next range. It would put us within this range again. And, of course, a downside break would be bearish. So, where it goes, kind of the way things are pointing, the market is getting, we're really overbought in the market. Sentiment is just getting, starting to get dangerously bullish. The trend is strong, so you can't just short on those factors alone. But when it gets so lopsided like that, that's usually where you get the big drops. When we've had these extreme, strong rallies, just like you have, explosive rallies after sharp correction. Just remember last fall, the drop down into the December 24th lows. The move off that was explosive because that was an extreme, sell off with extreme bearish sentiment down, towards the lows and everything else. So where I'm going with this is a breakout and a rally up to 1529 would most likely coincide with a correction in the stock market, a pullback. And whereas should the market continue to rally into year end, maybe have a melt up top, people talking about that. I don't think we're in a melt up stage right now. We're moving higher, but we're not in really what I consider melt up action. But if that were to happen, again, break of 1458 would be bearish. So until then, is there a trade to be made? Well, not really. There's minor resistance right here. If I draw a line there, and the trade, if you're not in gold, it's really not objective to go long just shy of resistance. It'd be much more objective to wait just a little bit, maybe 1490 or so gets taken out, it's taken out impulsively, then you go long because that's a breakout. Otherwise, really the only objective trade to make right now would be to short gold with a stop somewhat above. Although I'm not. That's not what I'm doing right now. I'd rather just wait and see which way this one goes and which way the markets go. If we get sell signals on the equity markets that I covered earlier, maybe then trade on gold, because that would likely be the catalyst for a pop above this level, and maybe put us, a little run, maybe get that 2-3% pullback in the market, rally up, to about right here or so, 1500 or so in gold, and come back and back test and get within that previous trading range. Here's silver. Silver will roughly follow gold. I don't want to spend a lot of time on it, but you can see I have an uptrend line right here. Resistance is pushing up against at 1716 right now, with the next resistance around 1736 if it pops there, and you can see my other levels here. These are all up to date, all the levels on that chart, so just screenshot that if you want. And it may continue to work its way. If you look at the bigger picture, and this is a 60-minute chart, but if we zoomed out a little bit, you'd see the makings, and you can see it here, of a potential symmetrical triangle pattern. You have that downtrend line and this uptrend line there. So maybe silver will work its way in there and eventually then break out of that larger pattern and signal a much bigger move in either direction. So we'll just have to watch that. Quick update on Bitcoin. I posted charts on the homepage, so really no reason to post much more than that today. There's no follow through. We broke out, as I mentioned this morning, and again in the reply in the comments section yesterday, somebody asked about it. Is it a breakout? They asked if yesterday was a breakout because it was like a 7% or so rally. No, yesterday we had a big green candle, but that doesn't matter. That's not a breakout. Anytime just because you have a big gain on a security, it could or could not be a breakout. It all depends. So it wasn't yesterday. We rallied right up to the top here. Let me zoom in a little bit. I realize if you don't have a big monitor, you probably can't see these charts well. There it is. So there was yesterday's candle. Took us right up to the downtrend line. Today we, in early session or overnight trading, we popped above it, but we faded that early this morning before the market opened to come in for a back test. So two things. I don't consider this a breakout. I mean, technically speaking it is, but it's not the kind of breakout I want. It's not the confirmation I like to see. Number one, it wasn't impulsive, and number two, they faded it right back down. Now, it is a breakout, technically speaking, and we are back testing, so it puts it in a bullish posture as long as it can hold above there. Otherwise, breakouts that occur on low volume or get sold into have a higher rate of failing. So with the official trade on GBTC, that Bitcoin proxy, I want to see today's highs get taken out, and that's why I set the entry trigger to be on a move above today's highs on GBTC or BRR if you're trading BRR Bitcoin futures. So that's that. And if so, I already went over my targets, so let's not spend much more time on that. Positive divergence, everything else I like to see. And by the way, this is also tends to be a risk-off asset, so this also would align with a correction soon in the equity markets. They don't have to happen. The two are somewhat mutually exclusive, but you tend to see Bitcoin kind of selling off when the economy is doing well, the stock market's doing well, and when everything's going down in the equity markets, people have fear and they might buy more Bitcoin. ZC, or these are corn futures, and the ETN for corn is CORN. Interesting chart. We're looking at a daily time frame. This is a 18-month chart with daily candles, so a year and a half of trading history. What stands out to me, we have a nice clean downtrend line, especially right here, a lot of reactions along that downtrend line. Right here we had a divergence line that gave us bullish or positive divergence right there on the daily chart, and we broke out recently, and we appear to be bull flagging. So if corn can pop above here, again these are daily candles, above there, that bull flag would project. There's your flagpole. It should take us up to my next target here, about 408 and change or so, on ZC corn futures, and again you could trade corn. It would certainly help to see that happen and get this PPO. You can see right here is the zero line on the PPO, and ideally you want to see a bullish trend. The PPO will be above the zero line. I tried to box tool that. Let's just box that in like that. And when you're in a bearish trend, the PPO signal line, again the 9 EMA or the white line, is below. So we'll watch that, but again some potential there for corn. If it does break out, you should see a similar flag, I imagine, on CORN as well. You can take it and just set your stop a little bit below. There's some support right here, about 382 or so. So stop a little bit below that would seem objective. Crude oil, the breakout sticks. I had to roll these futures rolled, so where I had a slightly different level, I believe recently, this is that same level right there. I highlighted for a while. We broke out, back tested around it right there, and we held support. So there's that breakout in crude, and what I'm watching at parallel trend lines, but the most significant one is this lowermost trend line. We've been walking up this trend line. There is divergence forming. Remember, divergences are not a sell signal, but it's merely an indication that a trend reversal is likely. So as I'm doing this video, the theme that I'm seeing some nice divergences on the indexes. I'm seeing pretty clean trend lines too. There's a difference there too, so in which to trigger a sell signal. The better defined these trend lines are, the more I see them. That's the way at least I interpret my experience with technical analysis. So I'm seeing clean up trend lines, and crude has moved and will often move along with equities with the stock market, because if economic growth expectations are bullish, then therefore demand for crude should be higher in the future, and the crude tends to rally, and vice versa. So all these charts are aligned right now, my risk on and risk off assets, and breakdown in crude would probably take us back here to that breakout level around 50. It's not a hard to find level now because we chopped around a little bit, but roughly about 58.70. What would that mean from where we're at right now? That would be about a 4% drop. Remember, crude's more volatile than the market, so even if we only had a 2% pullback in the market, crude could easily drop 4%. So that's CL. And if it takes out that level, you can see this longer term trend line, uptrend line. It hasn't hit that in a while, and sooner or later it probably will. Here's, we were walking up, kind of hit it here, and we're quite a bit away from that trend line, so it wouldn't surprise me to see a pullback all the way there to come back in on CL. This is ZW wheat futures. This is an 18-month daily chart, daily candlesticks. Wheat's rallied into a pretty significant resistance here, about 558 or so, and it has some potential divergences. So then, unless it can punch above that level, my guess from the look of this chart, wheat's probably going to come back in here, maybe revisit this uptrend line again. So that just you really need to clear through here and take out these divergences to help firm up, the bullish case. I've been bullish on most, just about all ag commodities for months now, and still think that's, I still think they have more upside to go. I think the case continues to firm up that maybe a major bottom, the end to the bear market, and a lot of these commodities is over. There was our last divergent high, also right at the same level, and you can see what happened then. And we've traded around here for a while, so there's some support down around there where I just added that horizontal line, and that's just below here. So that would constitute a pullback of about 6% or so if we are rejected here off that level. We could punch through it. Commodities have been strong. They've had a strong bid, but again, risk reward just doesn't look favorable right now for wheat. SB, that's sugar, divergence pullback there. I don't have a strong opinion on that. GC I already covered. I'm just going through these down here. NG, I've posted an update again on the homepage today. We have this downtrend line is being back tested. The other day, yesterday I think it was, I mentioned it here, back testing that trend line as well as this uptrend line. And so we've continued to back test the downtrend line, and we've set up this little price channel. You look at this line here, parallel channel, and there's that support right around where, right around the stop point, because there's price support there at about 2.243. You can see the price support. So pretty much nat gas needs to hold up here. Anything can happen. You can get a little whipsaw, but that's it. That's it for me. I don't want to see it go much below today's low. If you look and zoom in, there was a reaction low from today. Remember, we had inventory reports today that gave us a little pop earlier in the day right there. But again, we need to pop above this trend line. So you can look at it one of two ways. If you're not in this trade now, it's objective to go long at support. We don't really have any hard buy signals yet, but there's two ways I like to go long a stock, either a pullback to support or a breakout above resistance. So you could go long here at support, and or, when I say and or, it means if you took a position here, you take a half or a third position, 1/3 size, adding to the position if you get a breakout. So that's what I mean by and or. You can either go long here and or on a breakout above there, resistance right there, and I'm still targeting that if we do, start to move up and take out these levels in reverse, 246 and or the downtrend line right there, whichever comes in first. That's why I say and or on that, because trend lines are dynamic. Price levels, horizontal levels, are static levels. The price doesn't change. But on a trend line, you have a slope, either a negative or positive slope. Downtrend lines have a negative slope, meaning every day the price comes in at a lower and lower level. So it all depends. If we shot up quickly, we'd get there and they come in together. However, if we zigzagged our way up here for a while, we might hit that trend line first. So that's how I, kind of adapt as I go on a trade like this or any other trade. And there's coffee. I've posted quite a bit of updates on the homepage. It's starting to crack there. Nothing impulsive yet, but it is below the wedge, and I still favor more downside there. So technically, that is a sell signal. We'll probably get a 60-minute close below there if we haven't already. And this is pretty decent support. So we could bounce, kick back test the wedge and/or that 129 level, or not. See, coffee is a trendy little sucker. When it runs, it goes up, and and the pullbacks are very little. It can become very overbought. But that's certainly a possible scenario. Again, it depends how you trade it. If you shorted the divergent higher, the break of this trend line here, at this point, it makes sense to, lower your stops to protect profits, and, could take out that 124 level without a reaction first. We probably get one because since we're, pretty oversold here. I don't see any flags or anything going on right now. So pretty much if you're short, just stay short now and trail your stops down and let it run, and see if we can get all the way down here to that 114-ish level there. And palladium. If the stock market would cooperate, meaning give me some sell signals, I'd add this as an official trade, but the case for a short is still there. It's unofficial, but it really needs to break this 1885 level right here. You have that previous reaction low right there. So this is a minor support level here. We put in that divergent high. We had the channel, what I call a channel overshoot. We had a nice price channel forming here, and then we overshot the channel recently. And that often happens on either a rising or falling wedge pattern. We overshoot the wedge or a price channel, and usually it's a one-time. When you have a momentum fueled overshoot, usually one time, and then you break to the bottom. This, we had two overshoots, but that second one was nice about it. It put in a divergent high right there, or it extended the divergences that were already building right there on the 60-minute chart. So plain and simple. We're below trend on that trend line on the daily chart, but this is pretty good support, and I think once that goes, and again, this also lines up because palladium has been trading more in line with the equity markets based on growth expectations, more as an industrial metal than a precious metal recently. And so if the stock market breaks down, I would put pretty good odds if the stock market trigger those. And again, those are short-term sell signals. Right now, anything is possible. I'm not looking for anything much more than maybe a 2-3% drop, pullback in the equity markets if those sell signals trigger. But that could be enough to break palladium down and get this drop here. And that'd be a nice drop, especially if you're trading palladium futures. It's a big contract. If you don't know what you're doing with futures, stay away. PALL is the ETF. But what is that? About a 5.5% drop from where we're at right now to that 1800 target that I have. That would probably put I'm guessing $10,000 or more in your pocket on one contract of PA. But again, it's a heavy contract. It is 190,230 per contract right now. And finally, we'll conclude it with euro. We broke this minor trend line, but we're at support right now, 1.1179. Pretty decent support on the euro. Not crazy that it's below this trend line. I've been bullish on the euro for a while, bearish on the dollar, but it's in an uptrend, a near-term uptrend, and that is support. So it's at support, and if it can rally here and take out that previous high, especially that 112.75 level, that opens the door for more upside. Likewise, dollar futures DX. This is a daily chart. There's your trend line right here. Trend line comes all the way back from May of 2018. Right here, this trend line. We broke below it recently, but remember, we hit this 96,434 support right there. Pretty good support level. So to get the dollar really going to the downside, you need to take that out with conviction right there. And that would, of course, be bullish for the euro, but it hasn't happened yet. So you have, as I just showed you, dollar, and dollar is back testing that trend line from below. So we're kind of pinched between support and resistance. So we'll keep an eye on these. And this is bullish for gold, falling dollar, and that's bearish for gold, rising dollar. Okay, we'll wrap it up here. I'll get this out to you guys, and we'll probably do a market recap today. There's probably not much more to cover than I already did. So if you see a market recap after hours, if you want to see it, but sometimes I come up and see things that I didn't catch earlier. I just wanted to state that I'll probably just cover those 60-minute charts and anything else that I see that stands out. This has been Randy Finney with Right Side of the Chart.